In this video, I'm going to talk about beta and what it means for your stocks and throughout the stock market and why you should care about it. So when you're new to stock market investing, there are so many different metrics that you can get hung up on, or you can really spend a lot of time trying to learn about. And one of them that you may never really take the time to get to know is beta. Beta is a measurement of volatility. The way to understand the number that you see when you look up a stock's beta is to realize that the stock market as a whole has a beta of 1. And so if the number is higher than 1, that means your stock that you're looking at is more volatile than the market. And if the number is lower than 1, then it would mean it's more stable and less volatile than the market. And it is proportional as well. So if you had a beta of 0.5, that would mean it's half as volatile as the overall market. Whereas if you had a beta of 2, it would be considered twice as volatile as the overall market. All right, so I thought I'd take a minute and just show you a couple of my stocks in my portfolio that have particular beta characteristics. So the first one that I'm looking at is Vail, and on finviz.com you can find most of your stocks. It will list the beta right here. So you can see this is my stock out of all of my portfolio that has the closest to 1, which actually was kind of surprising to me because it does move around quite a bit. But this beta changes over time. The score changes over time, and so all stocks will fluctuate. Sometimes they'll have a lot higher beta or sometimes a lot lower. Another one that you can look at from my portfolio is Activision. And you can see just from looking at the stock chart here, if you're not aware what's going on with Activision right now, is there is a deal in place, or I shouldn't say in place, it's proposed, where Microsoft will purchase Activision if the deal goes through in the middle of next year. And there is a price set at $95, and so that has stabilized the price while the rest of the market is going up and down, and that's reflected in the beta score here of 0.51. So it's not moving nearly as much. It's only moving about half as much as the rest of the stock market. And then finally, we can look at one of my other holdings is Stone. And if you look at it, it's got a beta of 2.4. And it's probably hard to tell on this particular stock chart, but this stock price moves quite a bit. Okay, so why should you care what the beta in your stocks is? Well, obviously, if you are one of those investors that really gets stressed out or really gets super excited and really make some bad decisions, you can look for stocks that have a lower beta so that your portfolio is more stable and you can hopefully control your emotions a little bit better and sleep easy at night. For most people watching this channel, I really think that you're of the mindset that's more similar to me, where you're looking to outperform the market. Well, in that case, typically we want to look for stocks that we believe these companies are going to outperform, and we're okay with them having a higher beta, because if that means it's more volatile, it means it's reacting in a stronger way, usually over the long term, to the upside. And so an example of that would be, for instance, in times past, Tesla has had a really high beta. And you can understand why. With all the hype and all the different changes that have happened with Tesla stock, you know, a lot of times Tesla will jump by huge leaps and bounds. And so if you really believe in your companies, it's okay to have a higher beta because you believe over the long term, most of that volatility, most of that movement is going to be to the upside. So should we always look for more high beta stocks? Well, not necessarily. It depends on your strategy and it depends on the time in the stock market cycle. So the reason I'm making this video today is because at this point, I am looking to add more beta to my stock portfolio. Let me explain why. Remember, if you haven't watched my videos before, in my portfolio, I work within a retirement fund, a self-directed IRA, so I am not concerned with buying and selling action because I have no tax implications. If you'd like to learn more about that strategy, I'll put a card up in the corner so that you can click through to that video and watch all about it. But what I normally like to do is when the stock market is riding high and the stock prices are really overvalued and I feel like, boy, things could really start going down from here, instead of just selling and trimming some of my positions to try and put more money in cash, instead of just making those kind of decisions, I will also look at beta. Because if I believe that things are going down over the next 3 months, 6 months, or a year or two, I want to then choose stocks that have a lower beta, because I don't want my portfolio to crash as hard as the overall stock market. And so that's why back in November and December, when I was holding stocks like Shopify and Teladoc and some of these very speculative companies with a very high beta, I was trying to transition the money I had in those stocks into much more stable stocks. Now, with the stock market being so much lower and starting to show signs that we may indeed reverse this bear market into a true bull market, we haven't quite made it there yet, but we are on at least a short-term uptrend that may indeed end up turning this market around. I want to transition out of those low beta positions into more high beta positions. But I want to make sure it's in very strong, fundamentally sound companies that I believe in. So if you're a newer investor, here's how you could get it wrong that could end up costing you a ton of money. When you start seeing the market crash and you start being concerned that, hey, some of my stocks are falling day after day after day, what do you end up doing? You end up saying, I can't take this volatility. I need to sell my volatile stocks and I need to get into the safe stocks that aren't crashing so much. And so you transition all of that money out of the high growth, speculative, volatile stocks into the safe money, right? But usually what happens then is usually by the time you make that realization and you learn that, you're near the bottom. And then you put your money in at the bottom in those safe stocks, those stable stocks, and then everything else starts trending back up and you're in the stable stocks. You want to try and do the opposite. When we're near the bottom, we want to start transitioning our money back into the more volatile stocks so that during the ride up, we're getting the most benefit. So beta is not the most important metric to pay attention to, but at certain cycles in the market, it really could help you get the most out of your stock investing decisions. I hope that helps. Until next time, have a great day.